Hi guys, this is Loaded Investor speaking. Today we're going to look at the current market dip and stocks that are screaming to be bought. So keep calm and let's grab a bargain. So we've had a slight dip in the overall market. However, for those who went in the dip of March 2020, it's still looking very healthy. But we have seen some considerable dips recently on companies that still have positive news, or they've got a concern and it's been massively oversold because of this concern and it's being amended immediately. And you also want to make sure for these companies you do go on the dip, provide high growth prospects for the coming years. So as the CFO of Capitaland said, on a market dip, you should be investing just as much, if not more, but in the right areas. So here's 5 companies that you should be buying on the dip. So Tattooed Chef, I have a huge position in this company at around $16. I got in after a negative Kerensdale article that I didn't believe to ring true for the company. It's a fast growing food company, plant-based food company in a growing sector. It's a smaller, more powerful version of Beyond Meat. There's a huge upside potential here for the business and market to grow simultaneously. They have a full 360 start to finish process from growing the food to hitting the shelves. So huge year-on-year revenue increase of Tattooed Chef, only just released through a SPAC called Merger 2, and SPACs are whispered to be the hot gainers for 2021. I won't be averaging up, but if you're still yet to pick up this beauty, it's dropped from 28 to 20 for absolutely no reason. Grab it. So Fiverr, outsourcing platform for work needed to be completed by skilled professionals, which, for example, the intro to these videos were created on. Next day or even same day delivery for £5, hence the clever naming. It makes outsourcing work cheap and instantaneous and will truly revolutionize the way outsourcing work works for customers, businesses, individuals, and the people that are doing the jobs on Fiverr and making a living off this outsource of work. So 81% year-on-year revenue increase, the stock is just tanked from 320 to 215. The only thing to be careful is the tech pullback after lockdown, which I will be using to go deeper into tech, using my travel stocks, which I went rock bottom in at March, using the profits from that to go into tech. It might still be early days to switch into tech, but for such a crucial company at this price, you know, it was at a premium and it still is at a premium, but sometimes it's a premium for a reason, because it's a bloody good business, so it might be worth picking up. So Neo's share price plummeted into oblivion this market dip. It was mainly due to supply chain issues that they couldn't meet demand. And this was one of the concerns that caused it to go down a considerable amount compared to other stocks during this market dip. I did say in my other video that this concern will be amended by them either finding their own manufacturing plants or will pair up with the manufacturer. They have thus then, in a matter of weeks, paired up with Jack, which is their manufacturer. Neo now own 49% in Jack, and they've teamed up, and this will amend this issue for the coming demand. And also, historically, Chinese stocks do go down around February and the start of the year due to Chinese New Year on February 5th. So lightning fast reactions from Neo. It's dropped from highs of 67 to 38. Buy. So Planet 13 back down around 30% to the 5's absolute steal. Once the mainstream get a whiff of legalization, the large investment firms will all bundle in. In terms of Nevada laws, they're being relaxed further, so the smoking lounges will be available. I've personally added another 30% to my position. I was hoping to add more. I didn't think it would be this cheap again. I've added more. Bring on the gains. So Alibaba back down near to lows where Ma went missing. Still a fantastic company and will serve well over the years. They're just struggling with giving customer information to the Chinese government, where the customer never signed for them to do so. I'm sure this will be figured out in time. Another concern was delisting of Chinese stocks by the US, but the US have confirmed that they're not going to do this, so no concern there either. So a 6th bonus company for those that just love information. Edge Market to be worth $8 billion by 2025. Fastly is the leader in edge computing space, and there are no signs that's going to change anytime soon. The average spend per enterprise per customer grew from 607k to 782k, an increase of 29% for the full year and 4% on last quarter for customer spending. They provide cloud-based data storage as well as super fast browsing and access to data from both customer-facing and for the business that it's operating for. This keeps costs down by companies not needing to store data on huge servers and speeds up interaction time digitally between customer and the business. To see its process as a customer requires some extra digging to see the full benefits B2B wise. But as I get a feeling the more this goes on and develops, the more I understand what they do to try and see it from a business perspective as well as a customer perspective is where you see the true power of this business. So seeing it from someone else's point of view, the business that's going to be using it, is very beneficial to any company involved in the digital world today. In the future, any latency-sensitive industries like media, telecommunications, and even financial markets can potentially be expanded to for Fastly. Their recent purchase of Signal Science, they're a highly regarded security company, and they can now integrate that security service into their cloud-based storage and upsell at a premium to existing customers. So it's back down at the level around 64 when they lost their biggest customer, TikTok. They only lost about 12% revenue of this, but there was a big sell-off. Since then, they have amended the revenue gap incredibly, and they only lost TikTok due to legislation reasons, not because of the quality of the service that Fastly are offering. Just one thing to be conscious of is the tech pullback after lockdown, but it is a significant dip, but it's still not cheap by any stretch of the imagination. But like Fiverr, a great business model, which is highly expandable and one for the future. So if you want to get alerts as soon as I release new information and new videos, then hit that subscribe button and the bell notification to get that as soon as possible. If you want to know my trades as and when they happen on the day, then join my Patreon, links in the description. So you can run around with your hair on fire screaming crash. However, if you went into good businesses and low value originally, this crash shouldn't really affect you too much and your portfolio should be okay. Use this opportunity once again to get in cheap on businesses that you truly believe that will succeed in the long term. So use chaos as an opportunity and happy investing.